like to make that money. You got to get motivated to make that money, man. TGIF. Hey. Short day. Got a short day. Good morning, everyone. This is Financial Literacy 101, and today we're going back on Intel. So we understand that nationwide, almost globally, there's a chip shortage, aka semiconductor shortage. There's all types of microchips that goes in all types of things. You name it, microchips probably go in it. Inside of your TV, your laptop, your smart device, your cell phone. I mean, you inside of cars, boats, jet skis. People don't understand the amount of microchips that goes in pretty much anything with any sort of technology and or AI. This is the time to buy Intel once again because you missed out when I gave my other review back in early November time frame. And we're going to let you see that because right now, let's talk about how Intel is still moving regardless of the chip shortage, and you should be looking into your Intel future. Now, over the past year, now we'll even go back to 5 years. Over the past 5 years, Intel has been up roughly 55%. The past year, they've been down 11%. The past 3 months, 8% they've been down. The past month, 2% down. The week, 3%. The day, 2.6%. Now, some of you are like, hey, wait a minute, wait. I don't see any trending for you to recommend this stock for me to buy because on your thumbnail, it says invest, right? And since I put the money sign, so it's kind of like subconsciously telling you to invest. Let me tell you why, ladies and gentlemen, because if you would have took my advice, which I gave out on November 3rd, it says November 2nd here, but I streamed it live on November 3rd. I must have messed up on anything. But nonetheless, only 150 people of you saw this, so that means only 150 people of you actually made some money. So again, this stock review was streamed live on November 3rd. Let's go back to the timeline here. Over the past year, we go back to November. Let's try to find November 3rd in the timeline. Put it out here a little bit more. That's too much. Give me 1 second here. I'm about to find this date for you guys. Don't you worry. Here we go. So November 3rd, this stock was worth $44.85. That means you would have made almost $10 of the investment if you would have took my advice that was given back to you on November 3rd, or if you even seen the video. So regardless of how you believe that the stock is moving, the stock has went up essentially $10 per share. That's $10 per share that you could have been multiplying on your money. Here I am again, a couple of months later, about 7 or 8 months later, trying to give you guys more information to let you know this is the time to invest in Intel once again. Even with the semiconductor shortage, even with the chip shortage, you guys shouldn't worry about that. This is the time that you should buy because this stock is still at a discount. Now, this stock, believe it or not, actually has some dividends. Now, the analysts over at MarketWatch is saying you should hold this stock, and I do agree. If you have it, you should hold it. And if you don't have it, I still think you should buy a couple of shares. How much you can afford. Now, some of you are like, oh, this is out of my price range. It's at $55. But what if I tell you that it has the potential of making $80 per share, making $30 plus, maybe $30 plus on your investment? Is that worth your money? Now, when I look at this company, one of the key indicators is their EPS, earning per share, is $4.45, meaning they are a company that's operating at a profit, meaning they're doing very, very well. Look at your dividends. These dividends ain't nothing really to talk about right now, so I'm just going to skip past it. 35 cents per share on your dividends. But nonetheless, year to date, this has only been up 12.32%. And again, it's just like anything else, ladies and gentlemen. You invest on what? You invest on potential. I mean, when you get promoted or you get a new job, they look at your resume and they give you the job based on potential, okay? There's a lot of things that people look at indicators of your past and they say, you might have the potential to be doing great. That's how essentially people get promoted. That's how essentially people get hired. And this is how you should be thinking about investing. If you're looking at analytics, statistics, data, and indicators, then this has potential of making you some really, really good money. Now, when I go over to Yahoo Finance and I'm looking at the performance outlook, okay, this is all analytics about what we think it's going to do. And I agree. Right now, I believe in the short term it will go up, but overall, there's still a chip shortage, and they're believing that this chip shortage will go out to 2023. But this is when I believe that you should buy in on the low. You should buy in at the low. You should buy in at the low. See, the reason why I like to say things 2 and 3 times, because I think sometimes the first time people don't really hear me, and then later on I say, oh, once you do a stock review on this, I'm trying to get you some money. So you need to listen up to what I'm saying. And long term, they believe that the stock is going up. I agree as well. So they have some other indicators on here. They believe that it's overvalued. I do not. This company is going to be more valuable because of the chip shortage, okay? Anytime there's a shortage of anything, prices go what? Prices go up because stock is down. And I mean, not this stock, but the stock of, if you stocked up on milk, you get what I'm saying. But nonetheless, let's go over to Zacks and let's see what Zacks is talking about. So Zacks right here, I absolutely 1000% agree. I believe that this is a buy. Now you saw with MarketWatch, I agree with MarketWatch with a hold. Now granted, if you have a couple of shares, 100 shares, 2 shares, it doesn't matter how many shares you have, and you don't sell this stock. Because some of you are like, oh, it's volatile, it's going up and down. Listen, we're living in a pandemic. And with that pandemic, there's a chip shortage, okay? It's somewhat related to what's going on. But if I were you guys, I would be going out and buying Intel. Whether it be an option, a call, or a put. My bet is on a long-term call, meaning that the stock I'm planning to go up. But as you can tell here, I do agree with Zacks. The style scores are A for value, C for growth, F for momentum, and B, VGM, what is the total score, the accumulation of, and the sum, and I do agree with that as well. Now, what's important here? Future projections, right? Future projections, and a lot of times people are very, very visual, so let's look at it. Now, when we're looking at this particular stock, right now the current price is around $54.49 according to Robinhood, right here on CNN Business. The last time they took it is at $55.97. They're saying that on the low end in the next 12 months, it could possibly hit $40. And I will still tell you to buy then. The median price is $62.15. Ladies and gentlemen, we're talking about an $8 to $9 increase from the current stock price that we see right now. And then the high at 51.9%, so 52% at $85 per share, you have the opportunity to make a lot of money. Now, when I do these stocks that are roughly above $25 to $30, I'm noticing people are not watching the video. Ladies and gentlemen, scared money don't make money. You absolutely can't look at a stock price sometimes because you have to look at the stock value. A lot of people are looking for the next Neo. Where I came out, I told when Neo was $2 or $3 a share, and people are like, oh no, but there were some people who took my advice, and then you guys are sitting looking good on your investments. But then again, I also like to do some high price stocks because you got to have some skin in the game because these particular stocks do very, very well, which kind of reminds me. Now, the competitor with Intel is who? AMD. So let me go over to AMD because this might be a one-off for you guys. Nope, not at all. AMD is expensive as well. So either you're going to get in on Intel, and I know most of you guys don't even want to play with AMD. So that's pretty much what I have today. My stock portfolio is doing absolutely horrible. I've been tanking for a long while. The market has been very, very volatile. But then again, I'm not even worried about it. It's not like I'm going to cash out my stock account. Some people get emotionally invested in this. Family, if you are getting emotionally invested in your stocks, in your portfolio, and you're thinking about, oh, I'm going to sell my stocks, just give it a break. Don't look at the stock market. Don't think about stocks. Don't think about investments. Don't even talk about it. You need to give yourself an emotional break from investing if you're thinking about selling stocks that you have the information, or I gave you the information that a year from now, those stocks are going to do well. See, when I think about investments, right, I think about 50 Cent, aka Curtis Jackson. When he went in and he bought vitamin water, right? They wanted 50 cents to do a vitamin water commercial. 50 Cent said, you know what, I really like this. I want to invest inside this company. I don't know the amount of money that 50 Cent actually invested in, but I can tell you this. When Coca-Cola bought vitamin water, and then they also they offered 50 cents a large amount of money for his shares. Do you know that 50 cents made $400 million off of sharing his stock, off of selling his stock to Coca-Cola? You can look this up for yourself. They gave him $400 million. When I look at the amount of money that Jay-Z bought Tidal for, okay, Tidal in the same market as Spotify and Pandora and all these other ones. But when I saw what he bought it for, I want to say he bought it for maybe anywhere from between 5 and 7 million, and then he sold it for 25 million. Think about that in your income level. Let's talk thousands, right? If you were to buy some stocks, let's just say you bought some stocks for $70, right? And then a couple of years later, those stocks were worth $7,000. Was that a good investment? Anytime you can say over the past years, because of this investment, because of me selling, I have made 20% each on every year. Does that make any sense? Meaning you bought something on the low, and if you multiply and add 1, 2, 3, 4 years, and all those years accumulated, that you average out to 20% per year when you sold it. Learn money and be inspired. This is Financial Literacy 101. You guys have a great and wonderful day. I'm out.